Great. Hello, everyone. Thank you so much for joining us this morning with your Overseas Home virtual event. My name is Greta Azzopardi and I'm your host today. So it's great to have you all with us, whether you're watching live or catching up on demand. So in this webinar, we'll be discussing the financial and tax essentials of moving to France, and we're joined by Malcolm from Chase Buchanan. So thanks so much for being with us this morning, Malcolm. And if you wanted to go ahead and start the presentation, that would be great.
I shall indeed. Let me just start sharing this.
Great, thank you.
Okay, hopefully if everyone can start seeing that now.
Yeah.
Lovely. Okay, let's get going. So, the essentials of moving to France. Okay, so let's get through this presentation. A little bit about me, I'll keep it brief. Although I'm based in the UK now, my background is very much dealing with financial advice for people who are either already expats or about to become expats. I've lived in 7 different countries now. So been there, done that, read the book, got the t-shirt, thrown it away again. So everything we're going to talk about today is stuff that I've actually been through myself. France is one of the countries that I lived in. So yeah, so I've only been back in the UK last 4 years, just before COVID. And so I deal almost entirely, like I said, with expats who've been coming here. So let's move on. Right, okay, so what you'll see in this presentation is kind of a theme that comes out as we go along. And this theme is that, unlike in the UK, the French tax authorities tend to be more skewed in terms of going after high net worths than they go after other people. So, and you'll see this as we go along. This is the only real, I would say, exception to that. So this is the Social Security contributions on income. To my mind, they're a little bit high. I mean, this is basically the equivalent to national insurance in the UK. Everyone has to pay it. There's no way around this, but I just wanted to give you a picture of that so you understand what that is. It's the only real exception to the theme, I would say. And we'll see that as we go along. Right, here are the sliding scales for income tax for individuals in France. Okay, unlike in the UK, this changes every January, on the 1st of January. So if you look at this one here, which is the nil rate band, the 10,777, last year that was 10,222. It's supposed to go up with inflation. It doesn't quite do that, but it does as good as it can. As good as the authorities allow it to. And so on the 1st of January, these will change and they'll be up 3, 4, 5%. Okay, so just be aware of that. Nil rate band goes up to 10,777. That'll be over 11,000 by January next year. And then we've got the 10,000 to 27,000 at 11%, and 27,000 euros to 78,000 at 30%. So if you then compare your income tax bandings to that in the UK, kind of depends on how much you're earning as to whether you're paying slightly more or slightly less in France compared to the UK. There's not a great deal in it. It just depends on how much money is coming in from your pensions and other earnings and so on and so forth. You need to sit down and do the mathematics. Obviously, you're going to know what you're earning a lot better than I would at this point. So those are the bandings, but just bear in mind they are going up. The longer you spend in France, the better it will be for you compared to the UK, because the UK ones tend to stay in one place for quite a long time. Exceptional tax on high incomes. So again, this is for high net worth. So this is where the French come in and go after the high net worths. This is just one of the things that they do. You'll see some others as we go along. Additional costs and additional tax for those earning over 250,000. Okay. I can go on to the next slide now. Okay, so this is a very important one. So because it covers a lot of Brits have property. This has been going on for a long time now. We're all a little bit Thatcher's children, bricks and mortar, bricks and mortar. this is something that we need to be aware of. A lot of nonsense written about this on the internet, so let's cover this because it's important. A lot of us have property when we move to France. A lot of us keep property for rentals when we move to France. So let's cover this. This is the only wealth tax as such in France. It's been changed to a real estate wealth tax. It used to be called something else beforehand because it used to cover other things. Now it only covers property. Okay, so only when you go over 1.3 million in terms of the property that you own does this kick in. There are a lot of nonsense written about it over 800,000. That's not true. You need to go over 1.3 million for the properties that you own in France. In France, okay, and then you're only charged on the amount between 800,000 and 1.3 million. So another way of looking at it is if the net value of the taxable property exceeds 1.3 million, then the first 800,000 is exempt from tax. I get lots of questions about that. Okay, so
yeah,
so just bear that in mind. Another thing which is very important: if you have properties in the UK or anywhere else for that matter outside of France, and you move to France, you have 5 years to get your house in order before they include those properties outside of France in this regime, okay, in this tax. Okay, so let's say you move to France and you've got 3 million in properties in the UK. Yeah, you've got 5 years to sell some of those properties so you can come under the 1.3. Yeah, or 5 years to continue getting more rents and so on and so forth, and then start paying some of the tax, or just reduce your property portfolio a little bit. There's nothing to say that you have to reduce your property portfolio. That's up to you, because if you don't, obviously there's a little bit of tax to pay here. Just bear that in mind. You've got 5 years to do something about it. Yeah, a lot of nonsense written about on the internet about this. You've got 5 years for properties which are outside of France. Yeah, if you buy a property in France when you move, and that's under 1.3 million, then you've got nothing to worry about. Until, of course, it goes over that value, and then you've done more than 5 years, and you haven't sold any of your UK overseas properties. Okay. There are ways to mitigate this. You can talk to me afterwards if that is an issue for you guys. So there are things we can do, but it's all very bespoke. So I don't want to talk solution today. But yeah, come to me if that's an issue for you. Okay. Next, taxable income on movable properties. Okay, so we don't have this in the UK. It doesn't exist. So we have it in France. And what this is a tax on anything that's not bricks. Sounds a bit scary, but let me cover it. Okay, so anything that's bringing you an income that's within your house or parked outside. So let's say you're renting out a Lamborghini, or you've got some Banksies in your house, which are increasing in value every year. Okay, this sort of thing, they'd be interested. It is a notoriously difficult tax for them to collect. Yeah, because obviously most people don't declare them. Okay, but it is something that you just need to be aware of, and I want to make you aware of it because it's obviously the ethical thing to do. So if you have anything within your house which is going up in value, then you're taxed 30% capital gains on the growth, not on the value, on the growth. Okay. If you think about it, though, the reality is that most of the things that we have in our houses, despite what we might think of them, are actually depreciating assets. Yeah. Yeah. So even jewelry, even paintings, that kind of stuff, most of them are depreciating assets. So don't worry about this unless you do have a business that runs on something like this. You know, you've got a whole lot of cars that you rent out, which are parked outside. That's the sort of thing that you need to worry about if with regard to this tax. Most people don't need to worry about it, but I need. Okay. If you do want to mitigate it, come to me. There are ways. Okay. Next, pensions in France. Okay, so this is a vast topic, okay, which I'm going to squeeze into about 2 or 3 minutes. Okay, and then If you've got any questions about it, please tell me. But this is important because most of us who move to France are have pensions in the UK, and there are things that we need to do just to make them French when we move to France. Yeah. So let me give you a little bit of background on that. So very briefly, the long story made short. So very briefly, back in 2004, you have what's called the European Tax Directive. This is all to do with the freedom of movement of people and the freedom of movement of capital, as we all know, so that the European Union can compete with the US, China, and so on. So part of the freedom of movement of capital was pension. Biggest investors in the world, bar none. So what happens there? So all the European Union were trying to do with this directive is make the pension system fairer and trying to drag it into the 21st century. Okay? They realized that people were not working for 40 years for one company and then retiring. Yeah, those days were gone. Yeah, most people were doing 5 years here, 10 years here, 1 year here, 2 years here, and often for different countries, companies, and often in different countries. So all they were trying to do is make it fairer. So they were saying, look, if you're in France and you've got a pension back in the UK, why are you paying UK tax on it? Why are you paying tax on the growth? Why are you under their rules for succession pensions and all these sorts of things? You can have it in the country where you're based, or within the Europe, or anywhere within the European Union, where the rules suit you and don't suit the HMRC. And basically, they were doing this for all countries. So if you were in Portugal and you had a French pension, same thing applies. So saying, why are you paying French taxes? Why are you paying? Why you come under French regulation? It's your pension. It doesn't belong to the pension. It's yours. You're the beneficiary, much as the pension company would different. So that's why this came about. Again, long story short, in 2006, this directive, which strictly speaking isn't law, becomes law in the UK. Everything I'm talking about now, you'll see on the HMRC website under overseas pensions. Okay, all their legislation, and they made it legislation on the 6th of April 2006. It's often referred to as Pensions A Day. Okay, so you type Pensions A Day 2006 into Google, all this stuff comes. Basically, from that day onwards, anyone who had a UK pension, doesn't matter what color their passport, yeah, they had the right to take their pension with them into the European Union. Okay? Simple as that. Why did they do it? Well, for lots of reasons. I won't go into all of them because we'll be here a while. Okay, I'll keep it nice and short. But basically, it's for tax reasons and for reducing their risk. So there's a lot of benefits to having it outside of the UK and having an overseas pension if you're based overseas. An overseas pension is designed for people living overseas. A UK pension is designed for people living in the UK. Legislation European Union put in and HMRC in 2000. What HMRC did not envisage in a million years is that this would mushroom into a massive pensions transfer industry, not just out of the UK, but within the UK. So people were transferring their pensions into one pot in the UK, making them easier to manage. But also, if people were looking to move overseas, they were taking their pension out into the HMRC approved overseas pension, and that's what this is. So it basically reduces your tax. It reduces your tax to the beneficiaries as well. They're not subject to income tax when the money passes on to them. Also outside the Gordon Brown stealth tax of 1997. So he taxed pensions on their growth in the UK. We're the only country that do that in the European Union. So he started doing that. And so if you've got your pension outside of the UK, it grows tax-free. If you live in the UK, it has that tax taken from it. Again, if you type into Google Gordon Brown 1997 pension stealth tax, all this information up. He did some other stealth tax at the same time with regard to VAT and a bunch of other things. But that was the main one. That was the one that brings in most of the paper. So yeah, overseas pensions designed for people living overseas. UK pensions designed for people in the UK. You move to France, all you're doing is moving your money from your left pocket to your right pocket, making it compliant in France. Okay, simple as that. Okay. If you have any questions about pensions, they are usually bespoke. Most people have more than one. So talk to me. Get in touch afterwards. We'll fix a meeting to information. Everything is, there's no one size fits all with these things. It will depend very much on your situation. Do you have children? Are you married? How much do you want to spend yourself? How much do you want to pass on? When are you retiring? What do you want to do in your retirement? All these things. And what other regulations under within the UK? That's also very important. Yeah, understanding what you've got to do anything, most important thing. So, about that afterwards, but that's very, very big topic. Yeah, get in touch if you've got any issues, got any pensions in the UK and you're moving to France, speak to me. Okay, next one, inheritance tax. Okay, so inheritance tax in France is notoriously complicated. Okay, I've kept it as simple as possible as I can and put it on a single page. I didn't think that was possible, but I managed it. So, inheritance tax. Inheritance tax is a funny thing because most people don't understand it. When you move abroad, what then matters is the double tax agreement between the UK and the country that you're moving. Okay? The double tax agreement in most countries in the European Union does not cover inheritance tax. So HMRC come after you. Okay? Not so in France. It does cover inheritance tax. So you become a tax resident in France. So you do your 183 days in France. In a particular tax year, you become a tax resident in France. You come under French inheritance tax. You no longer come under the UK. French inheritance tax, slightly more odious. Okay, so you have a tax-free allowance of 100,000 euros for each child. And then you have these bandings, as you can see, in terms of tax for everything above 100,000 for each child. Okay, there are ways we can mitigate this. We can't mitigate it completely, yeah, but we can mitigate a good chunk. Okay,
Yeah.
It's not something you can do on your deathbed. Yeah, you can get it organized and get something set up. There is only one show in town for doing that in France anyway, so nice and simple. So yeah, get in touch with me and talk about it. Yeah, and we can do something. You will definitely come under French inheritance tax once you've spent 183 days or more. Okay. Right, and finally, this is an important one, tax on traditional assets and portfolios outside of France. So things like ISAs, brokerage platforms, investment platforms, investments that you got with banks, these sorts of things, even fixed interest that you got in cash, which wasn't thinkable 3 or 4 years ago, but obviously you can get money on cash now because of interest rates. Because what the French do is they will tax you capital gains tax on your worldwide assets. Okay, sounds a bit draconian, but this is what they do. However, there's a very easy way around it. Okay, and it was actually invented by the French back in 2017. And I'll give you a little bit of background with regard to that. So, back in 2017, the French decided that not enough people were moving to France, and they decided that one of the reasons for this is there was no real incentive for people in France to keep their money, especially high net worths and this sort of thing. So people were moving to Portugal, people were moving to Spain, and other countries were making it, were giving incentives to move to those countries. And also, they were worried about the people already in France. What incentive did they have, especially the high net worths, for keeping their money in France? It would make sense for them to hide it offshore. A lot of them are doing. Okay, I'm sure a lot of them are still doing it, actually, but that's opinion. What then happened was they invented what was called, or rather, one of the banks came to them and said, "Look, we've got this wonderful product. It's a cross between an investment product and insurance product." They amalgamated it kind of together, and the French said, "Yes, we accept." Okay? And basically, what that was, it's like think of it as like an umbrella to incentivize people who've got money offshore to bring it into France. You can keep it in the same investments, all that kind of stuff, but incentivizes you to put it in France as opposed to leave it in your ISA, leave it in your bank account, leave it on your brokerage platform, all these sort of things. And the best way to think of it is it's almost like an ISA on steroids. It does everything an ISA does, but
Okay.
it does lots of other things as well. So there's no cap on how much you can put in there. There's no time limits on how long you have to leave it in there. It's completely liquid. You put stuff in, you take it out as you need it. It's very, very good. It mitigates inheritance tax. It completely mitigates capital gains tax and income tax. The only show in town in France. They're common as muck. Every single bank has got one, but even companies and institutions outside of France have started introducing. So there's a very good one in Luxembourg. There's a very good one by the crew in Ireland and others as well. So I can guide people as to what's the best one for them. I'm a completely independent financial advisor. It all depends on your circumstances, what you're trying to do, what I would recommend them. Yeah, so I don't want to go into solutions or all that kind of thing today. But
Yeah.
yeah, France is nice. There's one show in town. That's what you do. If you've got stuff in ISAs, you do not keep the things, your money in ISAs, cash ISAs, or anything else for that matter, while you're tax resident in France. They'll come after that. And what they will do in some cases, for the ISAs, for example, is they'll find out when you set up the ISA and while you're in the UK, and they'll backdate the tax to that. Yeah, it's brutal. Yeah, so you don't want to, you just want to become French compliant when you move to France. And if you do that, it will cost you a lot less money than if you were to stay.
Yeah.
Okay. All right. So that's that. So yeah, you've got any issues with regard to you've got any kind of assets that are still sitting in the UK and you're in the process of moving to France, talk to me. I'll explain what you need to do. Okay. That's it. And then finally, I've been talking far too much now. Is
No, it's useful.
we all have, there's a lot to cover in France. That's the thing. Yeah, the problem with France is it's not like when I do presentations on other countries that I'm very familiar with. Um, you can usually go online and find 2 or 3 pages to explain everything. No such thing exists for France, and it's very frustrating, which is why I put this presentation together a couple of years ago, because I didn't see anything out there that could provide that. Just give simple bullet points for 3 or 4 of the major areas. You know, your inheritance tax, your capital gains, income tax, and so on. It just wasn't there, and of course the French are changing all the time as well. So so that's it. You know, we all have to pay tax. That's a given. There's no need to leave a tip. For any questions at all, contact me afterwards. I'm available at the conference, at the virtual conference now between now and 4 o'clock. However, what's probably best is you just fix a time with me over email. My emails are there, and we can it's time to have a I can because all these things are very bespoke. Okay, and I'm a private manager, private, and yeah, get in touch if you have any questions. And hopefully you found that helpful. I'll stop there.
Yeah. Great. Thank you so much, Malcolm. That was super useful, very insightful, I'm sure, for a lot of our buyers. So we do have quite a few questions. So we've got about 5 minutes now to go through. But as Malcolm said, if your question doesn't get answered, feel free to contact Malcolm directly. So yeah, if we just start off with a few questions. So do I have to pay tax when I bring my car to France?
Okay, yeah. So if it's less than 6 months old, then yes, you will need to pay an import tax. So make sure whatever you have, whether it's a car, bicycle, camper vans, I get asked about that a lot. Camper vans, make sure it's because a lot of people like doing that. My neighbour it's
Yeah.
got a huge camper van parked outside there. Absolute eyesore, but
Wow.
there you go. But yes, so yeah, so make sure it's it's more than 6 months old. Sorry, and because obviously they're just protecting their car market and so on. So if it's less than 6 months old, then you'll have an issue. Yeah, just make sure it's more.
Great. Okay, thank you. And at what point do I become a French tax resident?
Okay, yeah, so 183 days, technically speaking. So, and remember now they stamp your passports, So, and I get asked
Right.
this a lot. So when I'm in France, can I go to Germany and all this kind of stuff? Well, yes, you can. Yeah, and there's nothing to stop you because it's all part of Schengen. So all those kind of Schengen areas you can move around. Are they really going to know that you've done a few days in Germany and so on and so forth? No, but they'll know exactly what you've done in the UK because you have your passport stamped when you move back. So
Yeah, of course.
just make sure it's 183 days. Remember, the tax years in France are different to the ones in the UK. So the ones in the UK are from April to April. The ones in France are from normal people, 1st of January to 31st of December.
Mm.
So yeah, just remember that. That's kind of important. Things can get complicated if you've done like 183 days in one tax year in the UK and not in the other one, and 183 days
Sure.
in the air. So talk to us if you feel that might happen. There are ways of helping you there. So yeah, it's basically 183 days between 1st of January and 31st.
Great. Okay. And which visa should I apply for?
Okay, let's deal with visas. I do not deal with visas.
Yeah.
Okay, I am not a visa guy. However, I do believe there's someone presenting at your overseas home dealing with visas. So yeah, it is something that's important. Again, it's changing all the time. They want to see certain levels of income. That level is actually relatively low, or they want to see a lump sum or both. So that's something that they check now since the one. So, but if you don't have someone that I can point you in the right direction. Yeah, I know that there are obviously individuals who run very, very in France, and you'll get who help with this sort of thing. So, so yeah, come to me if you do have an issue with that. Come to me, and I'll point you in the right direction. I'm not going to push you away. It's just not something I do. I help people make money. I help people save. Yeah, visas, very, very specialist. If you're not sure, come to me
Yeah.
and I'll point you right direction.
Okay. Lovely. Thank you, Malcolm. Should I take my 25% tax-free lump sum from my UK pension before I move to France?
Okay, brilliant question. In most cases, yes, but not in all cases. I've had one case, or well, not one case, a few cases where it didn't make
Yeah.
sense for the client to take it out in the UK. But in most cases, it does, and I'll tell you why. Because if you take it out in France, the French at the moment don't recognize it as tax-free. Okay, at the moment, yeah. So no, that's being challenged. At the moment, that's where we are. So if you have a pension and you're over the age of 55, forget trying to take a pension before 55. Don't do it. Don't listen to anyone who tried to do it. Okay? Illegal, and you'll get fined.
Yeah.
Okay, so don't do that. But if you're over the age of 55 and you're about to move to France and you have money sitting in a pension, talk to me. I would say 8, 9 times out of 10, it makes sense to take that lump sum out while you're in the UK. Not all the time, depending on circumstances, but most of it. Take it out, and then the rest of it you can transfer over to an overseas. Depends really. I don't want to get into it because it's a bit heavy, but what type of pension you've got in the UK, yeah, and your circumstances, personal circumstances, yeah. So we'll cover
Yeah.
that. Talk to me, yeah. But most of the time, I get clients to take it out. Yeah, why pay tax in France? Why should you take it out in the UK? Transfer it. Yeah, but talk. Not everyone's like that. Yeah.
Sure. Okay, great. Lovely. Well, that's about all we have time for today, I'm afraid. So thank you so much, Malcolm.
Welcome.
And yeah, thanks for sharing your knowledge with us today. And thanks to all our listeners for joining us. So we strongly recommend you to get in touch with Malcolm and Chase Buchanan directly, just to discuss your requirements in a little bit more detail. So they will be available in our exhibition hall if you should have any more questions. And yeah, please feel free to take full advantage of our virtual platform, speak to our exhibitors, and add guides to your goodie bag. For guidance, please do head to Property Guides booth in the hall. So yeah, thanks a lot and happy property hunting.
Thank you.
Thank you. Bye.
Bye.